I would be shocked if we don't hit, if we don't hit 100,000 plus Bitcoin this year. Bitcoin and gold will sniff that out, and they will see that we're going to have massive money printing to a factor of what it was before. It's not going to be $5 or $6 trillion. It's going to be 10, 15, 20 trillion dollars, because that's where we are in the leverage of the system. That's what it will take in order to re-up this. It's an endless doomed debt loop that we're in, and we've got to keep it going, and that's the only way.
James Lavish begins by emphasizing the importance of a long-term investment strategy, particularly when it comes to volatile assets like Bitcoin. Unlike many investors who might have a short-term outlook, Lavish asserts that buying Bitcoin at current prices represents a tremendous value. His confidence stems from a belief that Bitcoin will reach $1 million per coin, whether by 2030 or 2035. This projection isn't based on whimsical optimism, but on a calculated risk-reward analysis. He explains that the market currently discounts Bitcoin's fair value significantly, indicating a perceived 94% probability of it going to zero versus a 5-6% probability of it reaching $1 million. While these figures are not exact, they illustrate the profound potential upside compared to the downside.
And I'm buying it all the way down because, especially with my hedge fund, because we don't have a 6-month view. We have a 7-year plus view. And if I can buy Bitcoin at these prices, I know, or I am extremely confident, I have a very high degree of confidence that the risk reward of buying Bitcoin here it's a tremendous value. And so I know that if I believe that Bitcoin will be $1 million someday soon, whether it's in 2030 or 2035, that I know that buying it here, the market is discounting that on just call it fair value. We won't do present value because it doesn't even make sense with where inflation's going. But just on fair value, I know that the market's discounting that to somewhere around a 94% probability that it's going down to zero versus a 5 or 6% probability that it's going to $1 million. That's a great value for me. It's not exact math. I'd have to get technical, but for the ease of just a glance at it, for people who are just glancing at it, I've had posts on it on my Twitter about how to break it down. But basically, you're just looking at it and say, if it goes to $1 million, so you take $1 million, and where it is now, it's at 50,000. Well, it's at about 5% of $1 million, right? So 50,000 is about 5%. So what's the difference? It's 95% chance that it's going to zero rather than a 5% chance going to $1 million. And that's just a glancing value. It's a little bit different than that because you actually would use a matrix, and you would do a lot of them. And then you would look at what you actually believe the downside value is. And most people don't believe zero. Some do. Peter Schiff does. But you look at those values, you look at those downside values, and you calculate it out. And so my number is a little bit different than that, technically, but it's the same exact approach to it. And that's when you look at it and you say, do I believe that there is a greater than 5% chance that Bitcoin goes to $1 million? And if the answer is yes, then you could do it with any number. You could say, do I believe it's a greater than 62% chance that it goes to 100,000? If I do believe that, then I should be buying it here. And I fully believe that. So you were asking before, where do I think Bitcoin goes? I would be shocked if we don't hit, if we don't hit 100,000 plus Bitcoin this year. And the reason we wouldn't is because of timing around the election, around some sort of geopolitical event. And it takes too much time between the time of the event and the tsunami of money printing that we will see after that event. But Bitcoin and gold will sniff that out, and they will see that we're going to have massive money printing to a factor of what it was before. It's not going to be $5 or $6 trillion. It's going to be 10, 15, 20 trillion dollars, because That's where we are in the leverage of the system. That's what it will take in order to re-up this just it's an endless doomed debt loop that we're in, and we've got to keep it going, and that's the only way. First of all, Bitcoin has had a tremendous run this year, right? So it's just taking a breather. I actually look at it as very healthy that it's consolidating here. You have a lot of old OGs, original Bitcoiners that have these wallets that are suddenly being activated that haven't been active in 5, 6, 7 years. And so what we're seeing is that there are some who are trading around it, and they're trading around that high, the all-time high price. And when it goes up to 70,000, they're selling it, and it creates some consolidation where people are taking profits. They're waiting for it to actually break through. And you've had some perpetual. If you watch the futures and the perpetual markets, you see that there's leverage at that price point above 70. But so what is going on? Well, it's going to take a tremendous amount of momentum to get through that level. And once it does, that's going to be a massive emotional level. And it's going to become some sort of base for it. So that's one of the things that we see going on, and it's difficult to time that, right? So you've had this run up from the ETFs. The ETFs were announced. It was a sell the news event for a day or two, and then they've had this tremendous rise since then, and now they're kind of backing off. They're backing off because, unfortunately, and like you said, most Bitcoin proponents all Bitcoin proponents who really understand that it's a risk-off asset. It's digital gold. It's gold 2, 3, 4.0. It is a much, much more elegant solution to hard money. Now, the problem is most people don't understand that.
Lavish highlights that significant geopolitical events and macroeconomic trends heavily influence Bitcoin's price movements. For example, he predicts that substantial money printing, potentially in the tens of trillions of dollars, will be required to sustain the current economic system. This massive influx of new money will likely drive investors towards assets like Bitcoin and gold, which are seen as hedges against inflation and currency devaluation. One crucial aspect Lavish discusses is the perception of Bitcoin among institutional investors. While many still view it as a speculative digital currency, Lavish emphasizes that Bitcoin is, in fact, a risk-off asset akin to digital gold. He believes that once the institutional world fully understands Bitcoin's decentralized nature and its robustness against manipulation, its classification as a risk-off asset will become more widely accepted.
And in the world I come from the institutional investing world, it's just seen as digital. It's a digital currency that's speculative. It's young. It's not that much different from ETH. I hear people say this all the time. Well, what happens if Satoshi shows up and sells his million coins? Or what happens if Satoshi just decides to change the code? What happens if the government shuts it down? What happens if? And what they don't realize, and what's so difficult for people to get their head around, is that this is truly decentralized. It doesn't have anybody in charge of it. Satoshi's not in charge of it. The Bitcoin ecosystem stretches across the entire world, and so that is what protects it from bad actors and change in the code. And so, but it's going to take time for people to understand that, especially in the institutional space. And once they do, then it'll move from being a risk-on asset to becoming a risk-off asset. And when that happens, you're going to see Bitcoin not just take a little bit of market share from gold, but and I don't think it's going to demonetize gold completely, at least not for a while. But once it does do that, you'll start seeing people allocate out of their long bond portfolios into Bitcoin. Because why on earth would you be invested in a 30-year treasury that's yielding 5% when you know that the expansion of the money supply is over 7% for the last 50 years? Why would you do that? It makes absolutely no sense. So eventually you'll come to that realization and you'll know that Bitcoin is a much better store of value than a long bond, even the US Treasury. In theory, if you only had Bitcoin that was entering the ecosystem from miners, in theory, then at every halving, Bitcoin would double in price. But that's not really true, because you already have, like you pointed out at the beginning of the call, you already have most of the Bitcoin has been mined. So most of the liquidity is out there. So going to that point, is this halving less impactful than prior halvings? I would say probably it is. There's a few things though. When you think about it, there's only been 3 halvings, right? So this is the 4th one. And so it's a very small data set to look at. Is it significant? What we have seen each halving is, yes, it's been significant price appreciation after the halving. Not right afterwards, but somewhere around the 6 to 18 month period afterwards, you see a large increase in price in Bitcoin. Now, do I expect the same thing to happen this time? I do. I expect it to be similar, and the factor that it is up, the actual percentage, I'm not sure what it could be. I don't. You and I have talked about this quite a bit before. I don't love making price predictions, but I do have a prediction that it is going up, and
Right.
Significantly. And there are a number of reasons for that. But yeah.
As institutions start to see Bitcoin as a viable store of value, similar to gold, they will begin reallocating funds from traditional assets like long-term bonds into Bitcoin. Lavish questions the logic of holding 30-year treasury bonds with yields around 5%, when the money supply has been expanding at over 7% annually for the past 50 years. He posits that Bitcoin offers a much better store of value. Given its deflationary nature and finite supply, Lavish provides an interesting perspective. Each halving historically leads to significant price appreciation within 6 to 18 months. While the impact might diminish as Bitcoin matures, Lavish still expects substantial price increases post-halving due to the reduced supply of new Bitcoin entering the market. However, he cautions against making precise price predictions, preferring instead to focus on the overall upward trajectory. Please like and subscribe my channel.